What if they called for a real estate crash and no one showed up? It's a real estate crash that doesn't exist. And, all right, let's just go to this. I'll give you my commentary. Here's my man, Brian Westbury, Dateline, October 22nd, 2020. September existing home sales increased 9.4% in September to 6.5 million annual rate, beating the consensus of 6.3 million. Sales are up 20.9% from a year ago. 20.9%. And if the sales are up, that means prices aren't down, just FYI. Sales in September rose in all regions. The gain was due to both single, family, and condos. The median price of an existing home rose to $311,000. The median, 50% or more, 50% or less. Average prices are up 11.6% versus last year. The median price is up 14.8%. This is crazy. Oh my goodness, the real estate crash! So just think, I don't have my trusty calculator. Let me bust out my trusty calculator. I'm sitting on my chair with old Pablo here. All right, so we'll just for simplicity. We're going to say we have $100,000 as our price of our house. We're up 14.8% times 1.148. So now it's worth $114,000. Let's just say we fall 7%. So next year we're going to fall, so we're going to times that by 0.93. 7% is a significant real estate decline too. We're still at $106,000. This is what people always overlook when they say, the crash is coming. In the interim, the market is going up and up and up, and the crash is coming, it's coming. What? And then when it comes, you're still ahead of the game because you started with $100,000 and went up 15%. Now it's down 7%. You're still above where you were, but you did deal with a crash. And a crash of a sort basically happens once in 100 years. Real estate still attracted me, man. It really is, all right? Let's keep reading. Let's see. Existing home sales continue to pass consensus, rising for a fourth consecutive month and hitting the highest pace since 2006. But that's a crash coming. Okay, it might be because 2006 was the beginning of the bubble, or the pretty much the closing of the bubble. All right. Did you get hit on the bubble? Did you sell? Did you buy? Did you get hit? Most people did not. Most people did not. Most people stay in their home. Now, if you were heavily leveraged and your job was lost, yeah, you're in a world of hurt. The job losses already happened. Excuse me, I got a frog in my throat. Hold on just a second. Now, there could be more job losses, for sure, but a bulk of the job losses have already occurred. And I mean, I hate to sound like that, but they've already occurred. So there could be more. There could be some people facing foreclosure, absolutely. But the idea that the societal impact across the realm is going to have a huge real estate crash is just silly, man. From February, pre-pandemic, to the bottom of May, sales collapsed 32% as lockdown measures and widespread economic uncertainty took hold. Since then, sales have blown past February and are up 13.5% from pre-pandemic levels. Sales are up 13.5% from the pre-pandemic. One major contributor has been the Fed's liquidity policies, which have pushed the 30-year fixed mortgage rates to record lows, boosting affordability. It also looks like the pandemic and the resulting public health measures have given potential buyers a new sense of urgency. I think that's probably true. 71% with demand for existing homes so strong that 71% of the homes sold were on the market for less than a month. 71% of the homes sold were on the market for less than 30 days. That said, sales face a continued headwind from the low inventory of existing homes. Today's report showed that inventories are lower than any other measure on record. That's crazy. Inventories are lower than any other September on record and down 19.2% versus a year ago. That's not indicative of a market crash. That's just not, man. If you have less supply and increasing demand, it's going to push prices up. That's just a fact. And supply is down 19.2%. And so supply is down basically by a fifth, and then demand has gone up. Even if demand stays flat, but demand's gone up. I mean, you can see what that means to prices. That's not indicative at all of a crash. This is reflected in the month supply, how long it would take to sell today's inventory at the current sales price basis of existing homes for sale, which is now 2.7, the lowest reading on record dating back to 1999. While lower price homes are in short supply, inventories have increased in the past year on the upper end of spectrum. Okay, yeah. Meanwhile, sales of properties worth $1 million and over are up 106% in the last year as wealthy urban dwellers purchase properties elsewhere to escape pandemic-related restrictions and social unrest. The shift in the mix of homes sold towards more expensive properties has put considerable upward pressure on median prices, which are now 14.8%, up 14.8% in the past year. That's crazy, man. And they're up 6 point. That's crazy. Look for continued robust sales in the months ahead. Although sales will eventually settle down due to a lack of supply. In other news, the morning unemployment front initial jobless claims fell 55,000 to 787,000. Meanwhile, continuing claims for regular benefits fell 1 million. Finally, on the manufacturing front, the Kansas City index rose 13 from 11 in September, signaling ongoing improvement in the retail in the factory sector. That's nuts. So you'll see all these videos. The coming real estate crash. It's just click porn, man. It's just a fear porn. Don't fall for it. All right, we'll see you.